So I'm Sam Huleatt, co-founder of Intangible Angel, and we're here for our inaugural interview. And who better than Intangible's other co-founder, Kevin Weatherman. Kevin is one of the more prolific angels I know, with over 100 investments, both direct, across syndicates, and even as an LP of a few different venture funds. As an operator, Kevin has spent time at PubMatic, MoPub, OneSignal, and most recently as a founder at Lever Health. So Kevin, we go back quite a ways, like many of our New York contemporaries, to the days of ad tech. You recently had a very cool experience with PubMatic, which was one of the earlier companies that you were at going public. So I'd like to start by having you kind of take us back in time a little bit and just tell us kind of how you got into startups.
Sure. Thanks, Sam. Glad to be here. My start with ads began when I was working in the Bay Area after graduating college at Berkeley. I was working actually at a transportation company that was taking Google employees to work every day, and realized at that time that if a company like Google could spend $15 million a year just transporting their employees from San Francisco to Mountain View, that there was a lot of money in whatever industry Google was in. I talked to my friend who worked at Lehman Brothers, and his feedback to me was Google's main business is online advertising. And so shortly thereafter, I began my search of online advertising companies. Actually came to a TechCrunch article for a company called AdBright that had recently raised $12 million and applied to join AdBright and became one of the first publisher salespeople at AdBright. And then have spent pretty much the majority of the rest of my career in ads and marketing tech. From AdBright, as Sam mentioned, I went to PubMatic, where Sam and I overlapped while he was working as one of the vendors as part of AppNexus. And then post PubMatic, moved on to mobile and joined MoPub. Then MoPub got acquired by Twitter, where shortly thereafter I went to a company called OneSignal doing push notifications, which is now the leader in push notifications, and obviously now here at Lever Health, helping people use data via our mobile app to improve their health. But today we're here to talk about angel investing, so I'm really excited to share some of my angel investing feedback.
Yeah, so let's dig into that. So what gave you the confidence, would you say, to write your first check? How'd that sort of come to be?
I don't know if I describe it as confidence. I remember being just like a TechCrunch addict. I would read every single article. And every time there were these funding announcements, there was always, this investment is led by VC firm with angels. And I would always see that like angels part and ask myself, like, who are these people? What are angels? And so over the course of the next year or two, as I'm getting started working at PubMatic, reading AdBright and PubMatic and reading TechCrunch every day, I started figuring out what these angel investors were. You hear, this is the angel who wrote the first 100K into Google, and like Google didn't even have a bank account at the time. So like they got this check for Google Inc. and they actually had to go to the bank and set up a bank account in order to become Google Inc. And so those types of stories helped me understand, and this is by reading books and things like that, what an angel was tactically, in terms that they were one of the first people to write a check into a VC backable company. And then as part of learning how to do that, I came across that event that every angel investor realizes: can I angel invest? Not unless I'm accredited. And so obviously I'm working at startups. I'm not an accredited investor. I want to be an angel investor, but because I wasn't accredited, I couldn't do it. And so sort of put that whole thing on hold until MoPub had a liquidity event. And so when MoPub had a liquidity event, suddenly this thing that I've been trying to do for a long time became possible. And so at that time, I immediately went onto AngelList and reached out to every single company that was raising on AngelList and asked them if I could write a check. And so ultimately, it ended up being one of my less thoughtful investments. I ignored red flags like the co-founders fighting in a meeting. I ignored red flags like shipping to the app store with bugs that prevented people from being able to update the app. All of these things were happening during my due diligence, and I just ignored them because I was really excited about writing my first check. But at the end of the day, once you become accredited, which the rules are changing, and so there's more of an opportunity for more people to be accredited, I just got really excited about angel investing. I would also say that doing a lot of public company stock investing has allowed me to get a better understanding at a high level of what the company could look like. And so that's one of the feedbacks that I give a lot of people is, what does this company look like as a public company 10 years from now? In the case of Pubmatic, 14 years from now. But the ability to sort of articulate to yourself what Palo Alto Delivery, because DoorDash went public earlier this week, what does that look like as a public company? And so being able to articulate that to yourself as you're writing these checks.
So before you wrote your first angel check, you had been sort of actively investing in public markets and sort of picking individual stocks.
100%.
Yeah.
So there was before Robinhood, there was a free trading platform out there called Zecco that allowed you to trade and exchange. They ran ads. And as part of Zecco, I was able to start buying Facebook and a bunch of these early stocks that I had opinions about. But I do think that one of the prerequisites to becoming an angel investor, part of the thing you're doing is deciding that I think this company is going to be more successful in the future than they are today. And so that framework, your ability to say, in the future, this company is going to be more valuable. A good way to start doing that today is picking individual stocks in the stock market based on a thesis.
Makes sense. And it's interesting too that you had brought up, TechCrunch. I think TechCrunch probably inspired quite a few angel investors back in the day, and it's unfortunate that publication's not quite what it once was. So moving on, I'd love to hear a little bit about how you think about your personal investment style. I think, we obviously co-invest together quite a bit. And I know there are certain areas where, you kind of consider yourself to be a thesis-driven investor. I'd be curious if, you feel that, you're kind of rely more on your gut versus other angels, or, in general, how do you think about your personal style or approach to investing?
So I've made a lot of investments, and I think the easiest way to think about this is, first and foremost, I'm looking for founders that inspire me. These are people that if I was leading a team at a company, I would make it a priority to hire them. These are people that I want to work with, because I think if the company is going well, you're going to want to talk to this person quite a bit. You want to help them raise, you're going to help them recruit, you're going to help them with all the things that they need to build the company. The second is that founder or the founding team's ability to articulate the vision of where they want to be, and the ability that I estimate that they'll be able to execute on it. So sometimes people set these like lofty goals of they're going to hire 15 engineers in the first quarter, and I just that's not going to happen. So I think the ability to understand the vision of where they want to be, how they tactically are going to go get there. And then the thing that I do intentionally do as part of some of my angel calls is give them some potentially negative feedback or some feedback in general and see how they take it. Having gone through the founding journey myself and been first chair as part of MoPub and some other companies, One Signal, I think the ability for the founding team to have a growth mindset in which they understand that they don't know how to solve the problem today, but they're willing to figure out how to get there is really important. And then I do defer a lot to my network to make intros. I went through my deals. I've done 3 out of over 100 deals from cold inbound. So there's just not that many times that a cold outreach has resulted in a deal. When it comes to the company itself, I'm focused on some things that I just immediately pass on. So I've had 2 bad experiences investing in hardware. I'm just not interested in hardware, period, moving forward. So if it's the world's most amazing electric bike, I'm going to pass. Anything related to hardware or physical goods, CPG stuff, I'm probably not going to make an investment as a direct investor. There's times where I'll participate in a syndicate at a lower dollar amount, in the same way that you might create one stock in your public portfolio as one of your core holdings. And then there's another stock where you might just take a flyer on it. Mm-hmm. And so that when it comes to direct investing, they also need to be building software. And then as somebody who is an angel investor who cares mostly about getting a 10x on my investment, but also getting my money back, the ability for them to build out a technical team is really important. So if you fundraise as an angel and you raise $1 million on a $7 to $10 million post, there's a world in which you hire 3 or 4 engineers and the company gets bought for $10 to $12 million from the engineering team. And I, as an angel, have the ability to either get some money back or all of my money back. And so I think that focusing on technical teams helps protect the downside when making an angel investment. Once I invest, my number one priority is helping that founder get to the next set of milestones. Typically, first and foremost, it's hiring, go to market on sales, and then getting them set up for the Series A or Series C milestones.
Interesting. Makes sense. So it's pretty clear, you're super thoughtful about how you approach your investing. You're a prolific angel. I'm curious. So you've had also very well networked. So it would seem like you've had plenty of opportunity to go over to the venture side of things if you wanted to, and yet you've remained an operator. So you kind of fit firmly in this new kind of category that people like to call operator angels. So I'm curious, what has kind of kept you on the operating side of things?
Great question. And it's something I've thought about multiple times. I think that the feedback that I've been given from investors that I trust is specifically this statement. Don't become an investor until you are done. Don't become an investor full-time until you are done being an operator. Because if you become an investor, whether you're joining someone else's fund and making a 5-year commitment, or you're starting your own fund and you're making a 10-year commitment to manage other people's money. Like, this is your full-time job, managing other people's money. Like, I hope that when I'm an LP, the people who are managing my money as an LP are taking the same level of rigor that I am. Is that a year, 2 years in, you're going to find an amazing business opportunity that you as an operator want to take advantage of. And so for me, the reason that I do not invest full time is I'm not done being an operator. And then I would say secondarily, the burden of managing other people's money is not something that I'm ready to commit to, mostly because I like to be able to sleep at night. And for me, it would be a big burden if someone trusted me to help increase their wealth with their hard-earned money, and I wasn't able to do it full time and deliver on it. So from that standpoint, I'm not ready to be an investor full time. There are 3 jobs as an investor full time: raising money, deal flow / decision making, and then working with your portfolio. I personally love number 3. I like number 2, and I do not like raising money, especially from institutional investors. So from that standpoint, I want to continue focusing on investing, number 2, and working with my portfolio, number 3.
Makes sense. That said, I know when you're ready, you've got the track record for it. And so that kind of leads me into, I'd love to hear just a couple highlights from your portfolio. I'm sure, you love all of these companies equally, but yeah, we'd be curious to hear a couple that are kind of standouts, and maybe that's just from recent financings or they just happen to be top of mind.
Sure. When people ask me about my portfolio, the companies that immediately come to mind are the founders and CEOs that I work really closely with. So Brian Long over at Attentive Mobile has done an amazing job in building a unicorn of a company over the last 4 years. The reality is, in that situation, I was investing in the founding team and their ability to execute over the idea, because at the time it was employee scheduling over SMS. And it eventually became the leader in SMS marketing, and SMS marketing obviously has taken off. So that was a situation where I was making a bet on somebody that I'd worked with and I'd trusted that was going to build an amazing company if there was an opportunity to. In addition, Electric AI is founded by Ryan, and Ryan and I had worked together when I was at PubMatic and he was running BNQT. And then I lent his second company, Swarm, space in our MoPub offices. And when he decided to found Electric, I was an immediate yes. Again, making the bet that this third-time founder was going to be able to execute and build an amazing company, whatever he worked on. I would say the last three that I talk about, mParticle, Mike Katz is just one of those people that I know is going to keep grinding and grinding and grinding. And he's built an amazing mobile-first CDP that I'm really excited about. Petal Card was an investment based on my own personal frustrations in having a really low credit score and saying, I don't know who's going to solve this problem, but someone is going to solve the problem of, if I have money in my bank account, but my Citibank credit card says that I only have $500 credit limit, like there seemed to be a mismatch there. And I would say that Jason has done an amazing job executing there. And then last but not least, as I was getting started with Lever, we started focusing on health data. And at the time I had a CGM in. And so when Josh approached me about building a consumer-facing platform for continuous glucose monitors, I was an immediate yes, because I was very, very knowledgeable about the fact that these medical grade CGMs were able to give data feedback in terms of like glucose levels, etc., that were very personalized and that could be used to actually close the feedback loop on what was healthy for you. So those are the 5 companies that I brag about when I talk about my portfolio. But yes, I do love all of the founders that I've worked with and spend a lot of time helping them out. As an angel, I would say that the value you provide is just as important when a company is going well and you're cheering for them, as when they're going through a tough time, they're having a hard time fundraising, someone on the team quit and they need to fill that role immediately, or they're in the process of shutting it down and they need to try to find an acquirer. Like those are the silent moments that you spend a lot of hours with the founder that you don't get credit for as an angel investor that do really matter.
Yeah, it's also interesting. The first 3 that you mentioned are all founders who came out of the heyday of ad tech. So
yeah,
something there, right?
And even Petal was an intro from an ads person that I know. The one thing I would advise anybody who's thinking about being an angel is the one thing that you can start angel investing in now is your time and getting equity in the companies that you work at. So PubMatic, MoPub, OneSignal, these are all companies that I didn't write a check into. These are companies that I spent time working at, and I have shares in those companies as a result of the time that I spent working there. So if you want to be a great angel investor, the best way to prove that you're going to be a great angel investor is put your money where your mouth is in terms of where you're spending your time.
Makes sense. So just a few last questions before we wrap up. One, I'm curious about how you think about, or if you think about portfolio construction, and that could either be specifically just as an angel or how you kind of think about, your overall kind of personal investing strategy and how you allocate to public equities versus private companies. From what I have observed, right, there's a wide variation between angels who kind of are looking to optimize or really trying to have a specific IRR versus others who, almost kind of view the money as, really just kind of a way to sort of pay it forward to the startup space, where they've built a career and, are just passionate about helping other founders. So just kind of curious about, how you sort of think about your overall allocations.
When I started angel investing, I didn't know what the word portfolio construction was. Still didn't understand pro rata, IRR, like all of these terms were things that I did not know. And if you are angel investing, you should probably look them up. For me, it was initially about paying it forward. Having made over 100 angel investments to date, it is financially something that I do pay a lot of attention to, and I've a lot of personal wealth in illiquid company stock that I do pay attention to now. So I do care about the overall return on an individual IRR basis. Like, I'm not going through and doing mark to market via pitch book to get the status of my portfolio. But I do pay attention, obviously, to these companies. Pretty much I'm going to hold these stocks as long as until they become liquid. So either they get acquired or they become public companies. So I'm not trying to optimize that. That said, Carta and these other platforms are making it a little bit easier to do secondary trades. So I'll evaluate that probably more as like a public market equity trader than anything else. In terms of portfolio construction, the way that I think about it is much more every time I make an investment, I expect it to go to zero. And so how comfortable am I with this going to zero is the question that I'm asking myself. The feedback I give to founders when they want to get started, or founders, operators, future angels, is pick a dollar amount, let's say 300,000, divide it by 3 years, which is about the time that you're supposed to spend allocating a fund, so $100,000 a year. And then how many investments do you plan on making a year? So if you're going to make 10 investments a year, which is a lot, then that's 10K per check. If you're only going to invest $90,000 over 3 years and it's 30 grand, now you're looking at, between 5 and 10K per check if you're writing 3 or 4 checks a year. So where I'm at right now is I'm typically writing a single 10K check into a company that I directly invest in. And then for syndicated investments, I'll write between 1 and 5K checks into syndicated deals. I do pay attention to the carry that is part of that. So should the company reach a liquidity event, the way that carry works is that I will get all of the initial investment back, and then the syndicate actually takes, most of the time through AngelList, 20% of the profits. And so that can actually be pretty material in terms of the difference between writing the check yourself directly and sitting on the cap table as an investor versus as part of an AngelList SPV.
Makes sense. Yeah, the carry with the AngelList syndicates would probably be another great conversational topic that we could do another interview on. It's likely we'll have some founders also who are listening to this interview in addition to angels. I'd be curious, what do you feel like is one thing, and I'm going to limit you to one thing, that you think makes you unique from other angels in regard to something founders might, look to you for?
Well, there's a lot of angels out there, so like unique is probably a big stretch, but I would say that the thing that I pride myself on is the second that check clears, I don't consider myself an investor anymore. I consider myself a partner in the business. I don't care if it goes under. I don't care what happens. I'm here to help the founder make the best decision for them and the team, as opposed to, there does become these moments where shareholders and investors are making different decisions than the founder and the founding team. And so I'm always going to be on the side of the founder, which probably would, again, make me a bad institutional investor. But that's probably the key difference is I am here to help out in any way that I am capable to you. The second that check is cleared and we're done, and now we're on the same team, and I'm going to help. You tell me how I can be helpful, whether it is For some of my portfolio companies, it's setting up their OKRs. For other companies, it's their go-to-market sales strategy. Like, I am willing to do whatever it takes, roll up my sleeves, get my hands dirty to help you get to that next stage of the business. And the reality is I can be very helpful from pre-seed up until the time that you're raising your Series A. And at that point, you're hiring experts in each of the roles that can be helpful. But when you're in that early stage between pre-seed and closing your Series A, there's a lot of things, especially on B2B businesses, go-to-market sales strategies, etc., where I can just say, here's how I did it. You guys can and girls can just decide how you want to do it. But this is how I've done it in the past and had success.
It's a great answer. I'm sure a lot of founders will appreciate that. So in wrapping up, is a final question. Be curious, 2020 has been an absolute bear of a year. I'd be curious, what's something 2020 or the pandemic in general has sort of like taught you?
One of the things that I did not realize until being in quarantine in my house for 6 months was the value of in-person communication. And so I do think that as human beings, it's really important for us to have deep human connections. And so I encourage everybody to continue to invest in those and make sure that you're checking in with the people you care about now. But when we do have the opportunity, when the vaccine is fully out there, et cetera, like, make sure that you're spending those times in person with the people that you care about. And so as a final thought, life is short. Deep connections do really matter. So really invest in those deep connections. Sam and I have been on and off working together for, I'm going to sound old now, 10 years, 11 years. And so make sure that you're investing in those deep connections that you do have, because they will help you through the easy times and, more importantly, the hard times.
Well, yeah, that's a great point to close on. So, Kevin, thank you so much. And for anyone listening, what would be the best way to sort of get in touch with you?
DMs are open on Twitter. Shoot me a message.
And that's Pub Kevin?
Yes.
Awesome. All right. Thanks so much. And we'll be back sometime soon with another one of these.